Dolly, start where we are right here in terms of New York. A lot of talk about the market's way off the boil. Where does it seem to go from here?
So I don't think it's as way off the boil as a lot of the articles that have come out recently would suggest. I think new development is way off the boil. So for example, in 2017, 8.9 billion sales closed. In 2018, less than 4.9 billion. Huge difference, right? So developers may be in a little bit of hot water. I think the rest of the market is actually okay. You know, people are taking longer to sell. You know, all this volatility makes people nervous, but there are positives and negatives to all of this.
Really feels like the tax changes, especially in places like New York, are having an impact. Is that what you're seeing?
It hasn't hit yet. Okay. I think next year that will hit. I think people will file their tax returns and say, oh my God, for the first time in my life, I'm taking a standard deduction, right? That will really hurt.
Fred, there have been overriding issues, or at least background issues, on affordability in general for housing. Interest rates look like they were going to be a problem for a bit. They backed off. How do you think things are set up right now, since we have such just low turnover, it seems, in residential housing?
Yeah, it's everybody, like Dolly said, there's kind of this wait and see attitude a little bit. Sellers are taking longer to sell their houses. And they're upset because 20 people didn't show up at an open house and put in 15 offers. But that reality is finally setting in with people. Interest rates, you look, 10-year was under 2.7 today. I mean, it's insane if you think about it. We really didn't get as high a push as we should have. And I think rates are going to come back down, and that's going to help spur the market initially. It's going to be, wow, we're in the threes again, because everything is a little bit quieter. The market also is changing. Yeah, the market is also changing a little bit because of what's being offered. There's the iBuyer programs where people are just literally buying online without seeing property. I think that's a little bit of a flash in the pan. One bad deal is going to kill that, and everybody will take themselves back on the sidelines. But also you have technology that is improving. Commissions are coming down. There's no sense in paying 5 or 6% anymore, because it just doesn't make sense to do. Also, rental properties, it's easier with technology to be able to manage your property or have someone else manage it for you, and you're going to be able to get reports right away. You're going to know what's going on with your property quicker. So it's going to be kind of a adjustment to the technology, basically the same kind of market. It's obviously it matters in each individual city as to what's going to happen with property values because of employment, et cetera, et cetera. So it'll be
Dolly,
fun this year.
How do the economics shake out right now? Buy or rent? Which is a better bet?
You know, each individual person has to look at that themselves, right? Generally, when you rent, you're not renting as good a product as if you were buying it. You're also not improving it. You're living in it as is. So it's also a huge lifestyle choice. You know, I myself, if I were to go out and rent, I'd rent something inexpensive in a nice area that worked. But if I want to buy something nice. So it's a big difference in lifestyle.
I guess which is a better bargain these days?
Better bargain is probably a rental, but that doesn't make it better. And by the way, I think the overall story for next year is going to be buy the dip.
Buy the dip in prices?
So in other words, wait for prices to come in?
Yes, buy the dip. I think developers are going to be stuck. They're going to give many more incentives. We're finding all kinds of developers coming up to New York from Miami this winter, have all these plans, from LA, from everywhere. People are going to have to adjust, and that adjustment will give us an opportunity to buy the dip.